The NSE 20 shedding 17 points. This has really been the story of February.
Yes, it has.
And why is that?
Well, if you look at it, there's always a period when there's somewhat political tension, and also the period about announcements. Companies are now, some of them have announced the last quarter in terms of returns and gains for that matter. But it also has a lot to do, if you notice, over the period has been political statements swing in the same way with the stock market.
All right, now let's talk about what we could be seeing by way of corporate actions. We are looking at results coming out from EABL and expectations going forward for other companies within key sectors.
Well, if you look at EABL for that matter, I mean, it was pretty much expected the way it is with the expansion plans, the recent acquisition. Remember the Tanzania, where the Serengeti breweries and the like. And then also in terms of their mode of approach, they've taken up new entities in Uganda, which over time it will take a while before they have that return on investment. The tea sector, if you look at it, last year has been a very big bumper harvest. Prices have been exceptionally high, despite these initial 2 to 3 weeks when there was a lot of unrest in Egypt, which in essence has affected. But beyond that, there's been a lot of demand for tea products.
All right, it's reported that the Nation Media Group, which is a consistently good performer on the NSE, is planning to delist from Dar es Salaam, and it's part of the broad aim of cross-listing. In Tanzania will be then the fourth market at which it has a presence. Your views?
Yes. Well, in the way I'm looking at it, when we started off from 1st July last year, the whole East African integration, just beyond business, it was also the whole idea of eventually having a single boss, whereby if you're in Tanzania, if you're in Uganda, if you're in Kenya, it really doesn't matter. You can trade your shares irrespective, if you're in Rwanda for that matter. And this has gone further by looking at companies also in terms of having more shareholders on board and increasing investment opportunities. Now, in areas that the companies have a presence. Sorry?
Let's talk about Nation Media and what it is they're intending to do. They are hoping to at least float about 157 million shares in Tanzania. What's the likelihood for uptake? They were very well received, for instance, in Rwanda. What would be the case in Tanzania?
Well, I would look at it from the point of view whether because if you notice with previous rights issues for that matter, Tanzania has always been slow in the uptake. So more or less it may tend to be the more Kenyans and Ugandans who would end up taking up. But going by recent announcements, the government has gone forward in trying to bring out the whole aspect of having a stake. And then going by the publications that they have, it may tend to now have sell itself as a Tanzanian entity, right, as part of the wider East African community, which would be an incentive to woo would-be investors.
Another company to watch out for, Uchumi. We know that they are planning on relisting. We know that they've been trying to, clean up their balance sheet. They've been talking to the Capital Markets Authority. 40% increase in pre-tax profits. And now we're also told that the CMA has allowed them to issue about 86 million shares to creditors. Where would you put Uchumi in the process of listing?
Well, I'll put it first and foremost, they've had exceptional management that has turned around Uchumi. But then also in terms of listing, you'll realize that the government indirectly will be one of the single largest shareholders with about 13%. So that somewhat gives a level of security in terms of management and the running of the company. And also it will go towards attracting would-be the large, what are they called, investors, in terms of large retail investors or in foreign investors towards the stock, because there's some element of security in that they now know that the business is being run well. The previous problems it had encountered that led to it and getting bad debts and eventually being delisted in 2006. And then value for money. I mean, the share would be priced at about 10 shillings to a valuation of 12 shillings. So it would be, and then going by its demand and the whole idea of Uchumi as a brand is still very strong within the Kenyan economy.
Also under the spotlight is the entire process of demutualization for the Nairobi Stock Exchange. And we're told that by April, we could expect the NSE selling its shares to the public. How's the public responding to this? Do they understand the process of demutualization and then uptake there?
To an extent, we'll have to give credit to the CMA for coming on board to try and create a lot of investor awareness. That has been a very big boon on their part. The CMA regulated director has been very vocal in trying to create investor awareness. And yes, I would say a lot of people are looking forward to it because it also, like I mentioned before, it brings a sense of ownership. You trade in the stock market and you have a stake in it. I mean, it brings in that element of there'll be a lot of uptake, not just from individual investors, but also from institutional investors.
Talking about institutional investors, they've been quite active in the bond markets, in the fixed income sector. I mean, the central bank alone has been able to raise over 179 billion shillings on particular instruments there. But now the CBK is asking for more support, particularly from mortgage lenders in trying to issue bonds to support huge demand within the home loan and construction sector. What's the response been?
Well, it's a very good sector that has come up in terms of to stabilize. What you notice that if you're looking at the stock exchange, there's been a lot of volatility where prices are concerned, but a bond tends to stabilize the market, and it also tends to attract long-term investors who are secured in terms of looking at their return on investment. And going by the home loans, because there's been a dearth or a very big demand for home ownership vis-a-vis the supply of the same. But this has always been a problem in terms of the housing finance and the rest are not able to churn out the demand. The savings and loan at KCB, they're not able to churn out or get to the market enough to meet the demand. And when you link the two, whereby you have a bond, construction bond that is issued, you have a bond that is specific to the housing sector, it will attract a lot of institutional investors, the insurance companies, the pension schemes, because they have that element of return on investment. There is no element of volatility, hence the attractiveness of the same.